The rent-seeking culture in crypto is absolutely real, and it's going strong, and it's never slowed down since the very early days of ICOs and even well before that. So, rent-seeking. For those who don't know, because I didn't know what rent-seeking was for a while, rent-seeking is essentially when a corporation or an individual or an entity is not really so interested in providing a solution for a customer or a solution to an individual, but they're much more interested in just stalling as long as they can, using stalling tactics, telling you that they're building something, but not actually ever delivering on anything. And they do this in order to get as much money as they can from you slowly over time. And so this is obviously called rent seeking because it's almost like, well, you need to pay your rent, right? So what I'm going to do is I'm just going to take my time and tell you, oh, next month we'll do it, but just keep paying into the system. Don't worry about it. It's fine. There's a lot of progress. We're building. We're BUIDLing. It's fine. It's totally not a problem. We have really big news next month. Just keep your money invested. And so that's what happens in legacy markets. This happens in the real world. This happens with governments as well. This happens with individuals who, especially with people who do things like software projects in particular. This definitely does happen. And so obviously that has taken a step into crypto. And in crypto, I think the rent-seeking culture is certainly on the rise. And one of the things that really triggers me when I think about crypto and some of its benefits and flaws. And one of the biggest flaws is that it really enables these teams to get into this rent-seeking kind of attitude because there's very little accountability. So, yeah, one of the examples of rent-seeking is founders' rewards, obviously. And some people may disagree with that, but I think founders' rewards are absolutely one of the biggest offenders. If you take a founders' reward, and I'm not going to mention coins that I've already mentioned previously that do this because I've beat up on them enough, but if you take a founders' reward, let's say 20% of every transaction or 20% of every block reward, and that goes towards you as a founder, well, you are never really incentivized to do very much for the project anyway because you're getting paid whether you do something or not. You are still getting paid. And so it only incentivizes you so as far as creating an initial state where the chain is valuable. And after that, really you can just keep collecting your founders rewards ad nauseum forever. And it's one of the worst offenders that I see. And this is many different projects. Many different projects have these founders rewards. They will also have things like pre-mines. So pre-mines used to be a really big thing back in the day. Pre-mines for proof of work coins where someone would release a proof of work coin and then they would just mine it. They wouldn't tell anyone about it. They would mine it for about a week or two or a month. And then they would make a Bitcoin talk thread and then would say, we've just released this new chain. But while the difficulty was really low, we actually mined like 5 to 10% of the supply. So that we just own that. And so as soon as we're tradable anywhere, we're basically going to dump on the plebs, which sucks. So that happened a lot in 2016 and before that. Afterwards, we had ICOs, and then the pre-mines moved from proof of work pre-mines to ICO pre-mines. And the way the ICO pre-mines worked is very blatant, actually, very honest and very straightforward. They were straight shooters. They said, hey, we're going to own 30% of the tokens that you pay us for. We're out of 100% of the circulating supply, we're going to own 30%. So we're going to basically, we're not doubling our money, but if you give me $10 and I give you back $10 worth of tokens, but I take 30% of that, I've actually made $10 plus 30%, which is great for me. So this happens in ICOs where they will say, I'm going to own 30% of my tokens on top of the money that you've already given to me, on top of whatever incentives we might have for the system, so that we don't have to actually use any of the money we've already raised for system incentives or building the project or anything like that. Many ICOs will have a pie chart like that where it'll be 30% for the actual crowd raise, people who spend their money, 30% for us, the team, and 30% for platform incentives. And platform incentives can be used for whatever. So you can imagine in a $30 million ICO that's valued at $30 million, you got your $30 million, your team just got $10 million worth of tokens, and you now have another $10 million worth of tokens that you can use to incentivize whatever it is that you want to incentivize, to pay developers, so on. So now you just got $50 million effectively out of a $30 million raise, and you've only given out $10 million. So it's quite a good scam. It's especially in the case where teams don't actually fulfill their duties, where they don't start to get to work, where they don't realize that whenever you do an ICO for a $30 million or a $50 million ICO, it's not, you didn't just make $50 million. What you have just done is created a $50 million debt that you must now pay off to your holders, because they have trusted you with their money, perhaps foolishly so in many cases, but they have trusted you with their money. And so now it is your responsibility to actually deliver and provide them with that value that they have entrusted you with. But we can see that doesn't happen. We can see a lot of rent-seeking culture. One of the examples is Shopin. So Shopin is an ICO that ran in 2018. And unfortunately for Shopin, I see a lot of the rent-seeking culture. They've raised, I don't know how much they raised, something like $20 million. And no one knows what's happening with that money. All we see are these faux partnerships, and nothing is really happening. And it's been about a year since the token distribution was supposed to happen. And even though it happened, they're still saying we need to do swaps. We need to do a token swap because they got hacked. Who knows by who, but some of their tokens got hacked. And so they did a token swap. And now they're doing another token swap. And it's been an entire year ever since. And no one is able to sell any of their tokens after an entire year. No one is liquid. Everyone is screwed. But you know who isn't screwed is the people working for Shopin. The Shopin team is doing just fine. They took all the money. They're just spending it as they please. No one knows where it's getting spent, and there's really no accountability, which is terrible. And so it's all about accountability. I've mentioned this once, I'll mention it again. The accountability is extremely important. If you don't have accountability, if you're not holding people accountable to the money that you are giving them, good luck ever actually getting them to do anything. Now, in traditional markets, a company is generally beholden to their investors, and because the way that works is incentives are aligned. If I invest in your company, I don't own tokens, I own equity, my friends. That means I now own a part of your company. I gave you money, but now in exchange, you gave me control and share and profit share rights of part of your company, which means that we are now in the same boat together. If the company is to succeed, we will both make money, the investor and the company. But if the company fails, both of us will get screwed. So we are both incentivized to do as much as we can for the project. In the case of ICOs, because these companies are not giving out any equity percentage, they're just taking the money and they're not beholden to anyone. Because they own 100% of the equity, they don't have to say anything to you. They don't have to answer to you. They don't have to do anything for you. And so there's very little accountability in crypto because of that, and especially for ICOs, which sucks. So legacy markets, there's an incentives aligned between investors and companies, not in crypto. So it's just, and the other thing is very simple human nature, right? If you have to do a lot of work in order to make a lot of money, you will be incentivized to do that work because then you will receive the money. If you receive all of the money first, what incentive is there for you to work? Why would you ever work when you already have the money? If you receive the reward first before you've done the work, there's very little incentive for you to ever even begin doing the effort. You have already received the reward. Why don't you just take the reward and go to a beach somewhere? Like that's pretty fun, right? So that's the same thing that happens in crypto, where we'll take $30 million or $50 million or $100 million, or in EOS's case, $4 billion. We'll give you all of this money, and then we'll ask you to build something for us with all of the money that we've given you. But you're already rich. You're already a billionaire or a millionaire or what have you. You've already made so much money that you will never really have any reason in your life on a personal level to make any more money. You've already made it. So the incentive is not there for you to do all of this painstaking work and work 24/7 and really put in effort and try to develop this thing and make an ecosystem and make this thing shine. It's not there. And so what we've seen is just the human element of that is simple. If you put the reward before the effort, then the effort is never going to happen. So we've seen out of every 10 ICO projects, 9 of them say, well, fuck it. I'm just going to go on a beach somewhere. I've already taken my money. I'm just going to delay things. And delays, by the way, are extremely, extremely prevalent in crypto. And this is why. It's because they already have their reward. And so why would we develop anything on any timeline? We don't have anyone to answer to. We've already made millions of dollars. We don't care, right? Makes perfect sense. If you were in that position, hell, if I was in that position, I would have very little incentive. The only incentive I would really have is honor system. People would have to just trust me that I would do it. But I would have to trust myself that I would get out of bed and decide to do it. But again, it would be almost working for free because I've already received the reward. So it's terrible. It also gives way to scamming. It does give way to scamming because if you receive the reward first, if you receive all of the money first, what that means is that if you do a good enough presentation, if you do a good enough shill, then people will give you their money without you actually having to have produced a single thing. You do not need to make anything in crypto. All you need is a really pretty website, a few advisors to give you credibility, and a little bit of marketing effort, and a Telegram that you can purchase, that 10,000 users to go on and give you this illusion and status that you are somehow relevant. And that is what a lot of ICOs did last year, and they did it in 2017, and they did it even before that. And it's just obviously scamming behavior. What they do is there was never any intent to build anything. You look at these GitHubs, and they're absolutely barren. There's no progress being done. All it is a weekly or a monthly Medium post or a video of people in an office somewhere, and they're not actually doing anything in the office. I've actually seen one of these videos. I'm not going to name the project, but this was a project that launched in 2018. Yes, they launched in 2018 in July, and they have a video now of themselves in some office in some country, and the video is of this female, and she's talking about she actually, the way that she talks, she doesn't even know. It's almost like she wasn't given any lines to say how fake this video is. And so you look at the video and you go, oh, that's what they're doing with all our money. They just went to a different country to leave, basically just exit scamming out of a country, left the country, so the authorities can't get to them. They're in this other country, and they're making these videos of progress, so no one really can go after them and say, hey, you're not doing anything. They can say, well, look at this. We've created a video, and look at that. We've spent $10,000 on a website. Yeah. Oh, you gave us $30 million? Well, we'll spend it. You have to wait and see, and we'll show you. We're developing something really cool. Big things are in store. So you have to be very, very careful with this thing. Very, very careful with who you give your money to in crypto, because there is this rent-seeking culture, and you have to make sure that the incentives are aligned. And if the incentives aren't aligned, don't invest, because chances are greater that you will get scammed or you will get burned, rather than you will actually have a good business deal with individuals and actually make some money. This video was sponsored by Cryptowatch. Are you a crypto degen? Do you spend countless hours in front of your PC babysitting your leverage trades? Well, babysit no longer. With Cryptowatch, you can spend countless hours in the comforts of your own bed, waiting for those SMS alerts. Track how wrecked your portfolio is that week with their portfolio tracker. And you can also check the price of your favorite shitcoins. If you'd like to join Cryptowatch, there's a link in the description below. Happy trading!